Hi, my name is Kyle Thompson. I am the founder of Leetown Advisors, which is a financial planning firm here in Des Moines, Iowa. One of the biggest questions I get is, what is financial planning? So that's what this video is all about. Financial planning actually covers 6 different topics. It covers cash flow planning, debt management, retirement and investment planning, but there's also taxes, insurance, and estate planning. What I'm going to cover today is a very basic, simple overview of retirement. And I'm going to share my screen so that you can see what I'm doing. Okay, what we have here is a couple that is 38 years old. They have some money saved up already. They both have about $100,000 invested fairly conservatively, 50% stocks, 50% bonds. They have good incomes. They make, between the two of them, about $200,000 a year, and they are saving 3% of their income into their 401k with a 3% match. They are currently living on $8,000 a month after taxes, and they hope to retire at age 62 on the same standard of living. So let's see how likely that is at this point. As you can see, it is not looking good. If they retire at 62, they'll have about $1.2 million, but that will be completely gone around the age of 68. Now, I'm guessing that's not what they want to happen, so let's change a few things up here. One of the obvious things to do was increase savings rate. So let's go from 3% to 10 and see what happens. Well, that helped a little bit, but they're still definitely going to run out of money. Now, what about if they delayed retirement just 1 year? All right, looking a little better. What about if they wanted to decrease their standard of living? Just live on a little bit less. $7,000 a month is still a good living for most people. All right, that's looking a little better. But like I mentioned earlier, they also are invested very conservatively right now. So let's see what happens if we make their portfolio more aggressive. Okay, that looks a lot better. So much better, in fact. Let's go ahead and bring them back up to where they want to be. All right, at this point, it is very unlikely that they'll run out of money. I would still like to see this number a little higher. This is the likelihood that they will be able to maintain that standard of living. So let's see what happens if we just push it off 1 more year. All right, that's about the number I like to see as a minimum. Ideally, I'd like to be above 80%, but 76% is pretty good. As you can see, small changes can make a big difference here. And making these changes early is always better. No one ever said they wish they would have started later with financial planning, but almost everybody says they wish they would have started earlier. Again, this was a very, very basic example. We didn't even get into Social Security optimization, cash flow planning, tax planning, because we could do systematic conversions to change their tax rates. There's a whole bunch of different things we can do to make this situation even better and plan for the future. Again, that was a very basic overview, and I hope you guys enjoyed it. All right.